Big losses on another volatile day for the markets, but the Dow rallies strongly. Foreign Affairs leaks. A man has been released, but a file goes to the Attorney General. A London magistrate rules that John Gilligan should be extradited to Ireland. And the jury is still out in the murder trial of British nanny Louise Woodward. Good evening and welcome. It's been another day of huge turbulence on global stock markets, and big losses were registered on the Dublin Exchange when it opened this morning after the long weekend. In New York this afternoon, the Dow Jones witnessed wild swings. At one stage, it was down a further 2% points. But this evening, there has been a strong rally on Wall Street. More than 1 billion shares were traded, and the index of US shares this evening was up 5% higher than when it opened. The Isaac Index of Irish shares closed down 278 points. In London, the FT 100 ended the day down 85. And as we came on air, Wall Street was up 320 points.
When the Dublin and London stock markets opened for business this morning, analysts and dealers were bracing themselves for the worst after a turbulent end to yesterday's trading sessions in both New York and the Far East. Within minutes of opening, the FTSE 100 share index fell over 8% in value, wiping billions of pounds off share prices. By midday, the FTSE had recouped most of its earlier losses, and city dealers were urging caution, saying it was not a time to panic.
It's not really advisable for small investors to try to sell now. At the end of the day, they ought to keep their stocks for a long position for a number of years. And I think if they were to sell today, they will just take in lots of losses. It's not the end of the world as we know it. Next year, the market will probably be up from these levels, so they should not panic.
Here in Dublin, the Isaac Index was taking its cue from the overseas uncertainty. Within the first hour of dealing, share prices had fallen 5%. This loss increased during the session to over 7%, with £2 billion coming off Irish share values. Blue chip stocks were the worst affected. Bank of Ireland fell 75 pence, while AIB was down 55 pence. Ireland's largest industrial company, Jefferson Smurfit, lost 29 pence. This evening, the Minister for Finance, who is monitoring the situation in Dublin and elsewhere closely, said investing in stocks and shares was not for the faint-hearted.
Anyone who plays in the stock market, it is a form of betting. You're taking a view that shares are going to go up, and other people take the view the shares are going to go down. It's interesting to note that on yesterday, when the Dow fell so much in New York, was the day in which the US Treasury announced that the budget deficit in America was going to be considerably lower than what it anticipated at the start of the year. That was economic good news, yet the markets went in the other direction. And that has been the form with stock markets the world over. It's not a game for the faint-hearted.
The Dow Jones had a roller coaster day, opening on a positive note before falling back sharply. However, in the second half of the session, share prices rallied strongly. And a short time ago, cheers could be heard from the exchange floor as prices rose close on 5% in value, recouping most of yesterday's dramatic losses.
News that £2 billion could be wiped off the value of Irish shares this morning, despite the fact that Ireland remains one of the most robust economies in the world, underlines to many just how treacherous global financial markets can be. The rot on this occasion started in the tiger economies of East Asia, where rapid economic growth caused balance of payments problems to grow. Global speculators got excited, targeted the Asian currencies and stock markets, and triggered big losses in recent weeks. In turn, this knocked global confidence at a time when stock prices had reached dizzy heights. All the equity experts are looking to the United States for direction in this time of crisis. And today, President Bill Clinton calmed some nerves by underlining just how strong the United States economy is at the moment.
Our economy is as strong and vibrant today as it has been in a generation. We saw yesterday that our deficit has come down to $22 billion from $290 billion. That's the lowest since 1970.
Some of the smart investors today were ringing up about not what should they sell, but what should they buy. And I think that is something that, again, people will be focusing on. The reality is that there's a lot of cash flow coming into the markets from pension funds and elsewhere, and that money will ultimately have to find a home. At the moment, some of that money is going into bonds, which have been beneficiaries of the setback in equity markets.
The sharp fall in global stock markets over the past 2 days has been seen as an overdue correction of overvalued share prices. Many may be tempted to see this as an opportunity to buy good shares at cheap prices. But investment experts advise caution on this, saying that the uncertainty is expected to continue for some days to come.